2019 stock market crash is guaranteed. Nothing short of a miracle will stop the market from crashing now. How to profit from an inevitable 2019 stock market crash. World-renowned hedge fund managers in the past several weeks have all predicted a stock market crash is headed to equities markets in 2019. Watch this video to learn why they are dead certain 2019 will be a continuation of 2018's bear market, and how you can passively profit from the coming shakedown in markets with a few simple changes to your portfolio. We've just begun quantitative tightening by central banks in 2018, and they intend to continue reducing market liquidity in 2019, which will continue to crash markets worldwide. If we look at this chart, in the right-hand corner is an arrow showing you are here. And the only thing that saved the stock market in January of 2019 is that the ECB upticked some money to save the market and took one for the team. But don't be fooled, because the Fed and ECB have no option but to continue pulling approximately $50 billion a month out of the bond market, at the same time that governments around the world are increasing their supply of government bonds. This is going to suck money out of the equities market in two directions. Think about this. In 2018, only the Fed was reducing its balance sheet. Now, however, the second largest central bank, the ECB, is also selling, which will accelerate the forces pushing equity markets lower. Until the Fed stops reducing balance sheets and raising rates, potentially even lowering rates, you can count on equities going lower. The potential crash in 2019 could send the QQQ ETF, which tracks the NASDAQ, down by 30%, or the S&P 500 by 20%, and take down global equities alongside it, until it finally forces central banks to reverse course and, of course, start QE4. And a 30% crash might be on the soft side. That would take us back to 2013 levels. But what if we go back to 2009 levels? Back in November of 2018, during a one-hour interview with Bloomberg, Ray Dalio predicted a decade-long Great Depression in which first equities and bond markets collapsed starting in 2019. And the link to this interview is in the description box of this video. In December of 2018, Stanley Druckenmiller, in an interview with Bloomberg, predicted a 5-year equities bear market and recommended buying bonds in early 2019. And in December of 2018 on CNBC, Jeffrey Gundlach predicts a massive stock crash worse than 2018 in 2019, with U.S. Treasury bonds collapsing shortly after equities markets from excessive supply. And he is actually one of the few who accurately predicted the 2018 stock market crash and bond yield breaking past 3%. Gundlach also predicts we won't see the bottom of equities markets until after the VIX has spiked above $40. The latest scare in December only reached 35, while the 2009 high hit 60. So until the VIX has spiked well beyond $40, don't expect a market bottom anytime soon. And until major progress is made on the trade war and the Fed has ended quantitative tightening, the general strategy endorsed by all three legends early on is a U.S. bond and commodities portfolio. And if we look at 2007 leading into 2008, when the SPY returned a negative 16% return, The TLT was up 6.5%, GLD up 44%, and USO 94%. And if you look at previous corrections and recessions, the same trend has repeated itself very frequently throughout history. Now, if you click in the left-hand corner of this video, you can download Portfolio Builder's income platform, which generates income, but also allows you to rotate through 3 different recommended strategies to protect your portfolio and generate income. And here are the optimized bear market settings for 2019, which has a 70% bond position, a 10% oil position, and a 10% gold position, as well as a 10% cash position. If you tell the software you have $100,000 to invest, this is how it would break down that trade alert for you automatically right now. And again, if you want to download the full spreadsheet, just click in the left-hand corner of this video at any time. So right now, it would tell you to buy with $100,000, 583 shares of the TLT, 82 shares of GLD, and 904 shares of USO. And this will automatically recalculate as the prices change or as you're changing your targeted asset allocations. And again, this is the defensive strategy, expecting the S&P 500 to go down. And this is only with a 16% decline in the SPY. The large 70% TLT 20-year Treasury ETF can generate a weekly income by writing a weekly covered call, which we send you a weekly trade alert for every Monday morning. And that's if you click in the left-hand corner and sign up for our 30-day trial. And a bonus trade for those of you who are looking for big growth in your portfolio is a surprising call for Bitcoin to hit $5,000 or a 25% gain in 2019 from Gunlock, who in December of 2017 on CNBC accurately predicted the 2018 crypto crash. In our $400,000 model portfolio, we have a 10% cryptocurrency position, which is broken down into 30% Bitcoin, 22% Ethereum, 6% Ripple, 2.5% Bitcoin Cash, and you can see the full breakdown if you pause the video right here. Now, our portfolio looks at the 30-day trading volume of all of the top cryptocurrencies, and based on their popularity, tells you which coins to buy and hold. So that when you first purchase Bitcoin, you'll know how much of the Bitcoin to convert into altcoins. Finally, the last piece of the puzzle going into 2019 is the long shot 1% portfolio crash insurance trade alert. This trade returns 1,000% or more and has a special spot inside of Portfolio Builder to track its profit, loss, and relative position size in your portfolio real time. And here's what this trade alert looks like. Now, this is an old screenshot and the price has changed. We will give you a new trade alert when you do take your 30-day free trial with the right strike price at the current market conditions. Now, what about after the market crashes? What will these hedge fund legends be buying? And after the market crashes, Portfolio Builder recommends switching to the following growth settings, which will anticipate a tremendous rise in global equities during quantitative easing round 4, including the next huge boom in cryptocurrencies. So this is when the banks will go probably to 0 or negative % interest rates. Money will flood into the markets and it will once again rain money into all asset classes. This is most likely when we see the next big boom in cryptocurrencies and gold, as well as growth stocks. So by targeting the 90% growth setting and a 10% cash setting, this will be ideal for the next cycle. And you can see, rather than owning the SPY ETF for the S&P 500, during a growth cycle, we want to hold more volatile ETFs with growth opportunities such as the QQQ, which is the NASDAQ primarily tech stocks, EEM, which has China, Brazil, India, really all of China's colony, Japan, EWJ, Europe with VGK, and then the Asian region with ASEA. That includes Indonesia, Thailand, Singapore, and many others. And so just with these 5 ETFs, we can cover the biggest growth stories around the world. Here in the States with the tech companies gobbling up market share, China story, the Japanese, the UK, Germany, France, Italy, Spain, Sweden economies, and then even into some of the smaller stories with Indonesia, Thailand, Malaysia, Singapore, and the Philippines. Now, what if there's no crash and we get the following 2019 surprises? Number 1, significant China-US trade war resolution. 2, continued strong growth of earnings in 2019. And 3, a Fed signals no more rate hikes and a pause or reduction of quantitative tightening. If we're in a period where we think the markets may be flat, there's not a lot of growth, but there's not a high risk of crashing, then the following high income generating strategy will be our go-to strategy, which holds a 90% income position in the SPY ETF and a 10% cash position. This pushes the majority of our funds into the SPY ETF. This is the best security in the world for generating retirement income, and currently the second safest security outside of purchasing treasuries. And what's really unique about it is that there's an option that expires every Monday, Wednesday, and Friday, which means for every 100 shares we own, we can rent out those shares to what I like to call gamblers, betting that the SPY will fly sky high, and we can generate income 3 times a week renting out these shares of our SPY ETF. So as often as possible, we'll want to be using the income setting to generate consistent retirement income. When we're very scared about the future outlook, we'll be in our defensive strategy, holding the bonds and the commodities. And any time that the VIX spikes over 30 and preferably over 40 will be a rare time to jump into our growth settings and ride those positions for easy growth. This is the section of Portfolio Builder where we can track the process of writing covered calls, which will primarily only be against either the TLT or the SPY ETF. And by rotating between these 3 settings, we can make profits during all market conditions. The end game these legends predict isn't a pretty picture for America, although they admit this final outcome could potentially still be 1 or more debt cycles away. Countries with too much debt eventually run out of credit and have to pay down their debt during what typically turns into a depression era and oftentimes war. The final prediction from Gunlack is that eventually investors become less willing to continue feeding America's debt addiction, and this eventually causes bond yields to spike and prices to dump. In fact, he's calling for a 6% yield on U.S. Treasuries much sooner than many people are willing to believe possible. Shorting the TLT will become the big play after the world debt grows completely out of control during QE4, is what I believe. So potentially 1 or 2 more debt cycles away until things get very ugly. So will the U.S. bond market be the last card standing before QE4 revives everything? Or will we see this bubble pop as soon as Gunlack is predicting? During this period, Gunlack predicts the dollar will lose its reserve currency and fall in value, and that things will get much tougher for Americans in the future until they've decreased their debt. And this will be when China takes the lead as they colonize Africa, the Middle East, Asia, and Europe with their new Silk Road. So thanks for your time. If you like this information, please subscribe to our YouTube channel. Click the yellow icon for instant notifications. And in the left-hand corner, click the link and sign up for your free 30-day trial.